Go. Welcome, everybody, to the 46th episode of the #InvestThis podcast. I am your host, Scott Bauer, and today, very blessed to have Adam Adams with us today. Adam, how are you?
I'm fantastic. How are you?
I'm doing phenomenal, man. Great day today. He is originally from Salt Lake City. Got his start in real estate investing through tax deeds in 2005. Then read the book Rich Dad, Poor Dad, decided to get into apartment investing. Smart guy. His first step in the space was as a property manager, where he managed a complete reposition in 2007, where he nearly doubled the value of an apartment complex in just 12 months. Soon after that apartment reposition, he bought his own multifamily property in 2008, and since then has managed several single-family fix and flips. Has partnered in over 500 multifamily rental units. He enjoys teaching and inspiring other investors to think bigger. And he also enjoys giving back. He gives back by sharing his knowledge as the organizer of Colorado's most active meetup group through hosting the Creative Real Estate podcast. Actually, his consistent focus on giving to the real estate community nationwide recently earned him the Master Investor of the Year Award 2018. So that's pretty impressive, man. Congratulations on that.
Thank you.
Why don't you give the listeners a little bit more about your background and what you're focused on now, and we'll get the call started.
Okay. Yeah. Well, I kind of grew up in real estate, so I have a unique case where my dad had multifamily and storage units and land when I was very young. And so I always kind of thought it was normal to do that when you got old and boring. And so then I was in college, and I wasn't yet old and boring, but my dad was stressed out that I wasn't yet involved in multifamily. So he gave me a piece of land that he bought for $100. And I was slightly appreciative until he told me that I had to pay him $100 for it. So he goes, "Oh, you know that piece of land I gave you for Christmas?" I go, "Yeah." He goes, "You're going to have to pay me $100 for it." And I was like, where am I going to come up with this money? I was in college, like I said, and $100 was a lot of money. So it took me a few weeks to pay my dad for the piece of land that he gave me. And then 2 years later, I sold it for $12,000, and I just finished completing that remodel of I'm trying to remember, 18 units was that piece of property that I was the property manager over for 12 months, and we turned it from a $1 million to a $2 million value just in that year. And I just decided I had to get into multifamily, and that's where I am today. Fast forward about 10 years after that, I've got 600 or so doors to my name.
That's phenomenal. And actually, so I'm guessing that there's a pretty big gap there, right? So you went from in college, you got a piece of property from your dad for $100. Was that a real number? $100?
Yep. So he bought it for $100 off of a tax deed.
Okay.
And then he gave it to me 2 months later, and then made me pay him $100. It is a real number.
Okay. $100. That's a very affordable piece of property. That's for sure. Now, let's fast forward into the 18 units. Where was that located at? Where did you find that at?
Springville, Utah. So the owner already owned it. And I realized that I wanted to get involved into multifamily at the time. So I was trying to think of the best way for me to kind of hack the system. And managing a multifamily complex became my answer. So I started calling multifamily owners from anywhere in Provo, Orem, American Fork, Spanish Fork, and even Springville. And finally, one of the owners, after maybe 20 no's, "I don't know you. Why would I have you manage my property?" Somebody said, "Yeah, sure. I was looking for one anyway. So, yeah, you can manage it, but I just need to let you know that I plan on selling it in about a year. And when I sell it, I can't promise that the next landlord will want you to be their property manager." And I said, "That's fine. All I need is 1 year and 1 day so I can tell the bank that I managed property for over a year," quote, over a year. And when I say that, I'm going to be able to qualify for any loan that I want. And he said, all right, it's a win-win. Let's do it. And then when I started managing it, he just told me everything to do. So I just implemented what he told me. And so that's kind of how I learned, was from experiencing repositioning large apartments.
Yeah, absolutely. And let's back up. So when you said, let's talk to the listeners a little bit about qualifying for the loan with management experience, what do you mean by that?
Okay, so at the time, I had learned that there was really three main things that you had to have to qualify for a commercial loan. And the main one was experience managing commercial property. Another one was just money in the bank, and another one was money to put down. So you had to have some liquidity, a net worth, and you had to have some experience. So I was trying to just get one of those three things as quickly as possible. And so that's what I meant by that, is just I needed the experience to qualify for a loan. And the bank will let you do that if you have adequate experience. And in this case, I wanted 1 year and a day.
Right, right. Right. Yeah, that certainly makes sense. All of those three things are super important. And that's kind of the importance of having a team. And maybe we'll talk about that later in the call. With regards to the 18 units, matter of fact, earlier this year, I had an 18 unit here in Phoenix that we were working on pretty heavily. And it was sounds like around the same type of valuation. However, our purchase price or acquisition price was closer to 1.5. And we ended up getting out of the deal specifically for that reason. We needed to be at $1 million. And we thought that we could turn it in 12 months into a $2 million asset. But unfortunately, after a lot of due diligence and kind of looking at the numbers, looking at the market cycle that we're at in now, found out that it wasn't a good deal. And I wasn't really willing to put my investors' money at risk, to get that done. So anyways, just interesting that you had the same type of experience. I'm glad that yours turned out to be successful. Now, you kind of mentioned how you got started in the real estate side with apartments. Your dad was an apartment investor or no?
Yeah.
He was. Okay.
Small multi, like fourplex, duplex,
okay,
stuff like that.
So why did you decide to go with the bigger stuff? Why did you decide to go, larger 18 unit? I'm guessing now you have over almost 600 doors, so they're probably larger than that. Why did you decide to do that instead of staying small?
That's a really good question. And I never really formulated an answer to it until now. And I mean, the best answer is just, I see that 2 is better than 1. I see that 3 is better than 2. 4 is better than 3. And so I guess my immediate response is that 100 is better than 99. So I just said, may as well go as big as we can. So yeah, we're looking at a 400 unit right now. And we're just going as big as our minds will let us go.
Right. Yeah. And it can be really hard to get out of that mindset, right? Because you look at a 400 unit building, I'm guessing that's probably $40 million at least, something like that.
Well, the one that I'm talking about is 23.9, so it's 52 a door. But like in that same area, they're going for 65 a door. So it's probably right where you're saying.
Right, right. And so the lay person out there that says, I don't have that much money, how do I do that? Now that brings us back to the team, because I'm sure you don't have that money either, but with the team that you put together, let's talk about that for a minute. What does your team look like? How do you get these apartment deals? I looked on your website. It looked like you have a rock star team. Let's talk about that for a second.
All right. Yeah. For me, I believe more in the team than I believe in many other things. So, and when you're looking at an apartment owner to put your money passively in, you would definitely want to look at who is the team, who are they, what do they stand for, what have they done? And for me, I knew that if I needed to, I could underwrite a property. If I needed to, I could fly somewhere to do the due diligence. I have a lot of construction background, and I knew that if I had to do it, I could do this part or this part. But when it came down to it, I like to put on events and I like to host podcasts. And so I just basically had to bring all the other parts on so I could do events and podcasts full time. And so our team, We have an admin. We have a market research expert. We have an underwriter, an engineer who does all the underwriting of the properties. We've got a asset manager full-time in the office. We've got me and then a social media person. And everyone thinks I'm the social media expert. They look at it and because I'm like all everywhere. And the truth of the matter is I just do what I'm told and someone else makes me look good.
Right, right. It's super important to do what you're good at and outsource the rest, which brings us back to the team. And I noticed on your website, you guys are not just doing apartments, but you're also doing single family houses. Is that true?
Well, we own about a dozen houses.
Okay.
Um, but it isn't our focus. We're only doing multifamily above 150 units right now.
Okay. Okay. And actually, it was funny. Dino Pierce reached out to me on Facebook this morning. He's like, "Hey, Adam Adams wants to do a podcast switch with you." And I was like, "What?" And he's like, "Yeah, you be on his show, he be on your show." And I was like, "Huh, that's funny. We're actually having an interview this morning." So I don't know if
Random.
I don't know if you talked to him recently, but he was on the show as well. Another great guy.
Yeah, no, I don't think I talked to him about this anytime recently, which is very interesting. But
Really?
yeah, the last time I may have talked to anybody about a podcast switch was at least 2 months ago. So random.
Interesting. Very, very random. Well, I'll ask him about that. But anyways,
Cool.
let's get back to the apartment side. So you're basically apartment investing full time. What's been the biggest obstacle you've faced up to this point with getting into the syndication side, with building the team? Just overall, the biggest obstacle you think you could point out?
Yeah, it's unfortunate I can only name one. I can think of many obstacles that have been rough to get over.
Yep.
If I boil it down to one obstacle, it's probably got to be the due diligence phase of buying an apartment where you've locked it up under contract. You've told your passive investors that you're going to need 5 million. You've raised the 5 million, and then when you're wearing a due diligence hat, which theoretically, visualize this as a listener now, it's a lot different than the acquisition hat. The acquisition hat is a hat of looking for opportunity, and the due diligence hat is a hat of I need to find out why I should not buy this property. And the hardest thing is, we had a different large apartment that was under contract, and we only owned 100 doors back then. And it was one property that was going to, be 80% of the portfolio immediately. And we were wearing that due diligence hat, and we had to walk away from this project that looked strong, but there was a possibility of losing investors' money. It was very, very hard to do.
Yeah. With regards to the due diligence side, do you bring your management company in to oversee the due diligence with you? Or do you, I know you mentioned that you're in property management, so do you have your own management company? Let's talk about that.
Okay, so we don't have our own management company. We do self-manage 2 of our properties, but just through what we're doing. As far as bringing the management company, you have to do that, and we do on everyone. We find a property, and as soon as we find a property, if it's in an area we've never been to, then we find the best management company. So that a lot of our own due diligence is finding the best property manager that has done an asset similar to the one that we're doing, because most people probably don't know you don't make your money when you buy. When it's apartments, you don't make your money when you buy. You make your money when you execute a business plan appropriately for 5 years straight. And that takes a lot of management. So once we find the property manager, we utilize them and their team and their network to do a lot of the due diligence on the property. But at the same time, it's not just due diligence on is the foundation cracked? Is the roof okay? Is there mold on the inside, or was this once used for oil, dumping oil, and the soil's contaminated? There's more than that. There's doing your due diligence on the people that you partner with, and that's been the harder part for us. Is when we find out that somebody there's a reason why we shouldn't partner with a certain person. It makes it very difficult to walk away, but we so far have walked away from every situation like that.
Yeah, it is one of those things. I mean, the due diligence side and having a competent management company that knows what they're looking for as well as you is really important, right? It's some of the most important part, and to fine tooth comb. Is that the word? Yeah, fine tooth comb through the property to look for every possible negative that you can find, to find your, every exit, check every box to exit out of that deal so you don't get burned is really important. And I think, that's a big part of it. The due diligence side is hard. It's not easy. And you have to know what you're doing. So anyways, what's the biggest deal you've done? You got a lot of doors now. I mean, is it a lot of smaller units? Is it a lot of just a few big ones?
The biggest one is 430 something, 430 something, but that was passive. So the biggest one that we've done on the active side on management is 83 probably.
Okay.
Right now. We have a 160 under contract, 162. So we'll see what happens. We just got that. I don't know too much about it yet. The underwriter let us know that we're going to be closing on it, but we'll see.
Sounds good. So obviously you have several people in your operation. You'd mentioned that you went down the list. What are your thoughts on partnerships and why? Are you guys all partners, or is it all individual and you kind of work together collectively as a team?
Yeah. So we have 3 people that specifically own BlueSpruce Holdings, and then the other 4. So there's 7 total. The other 4 have a contract with us that if they perform what they do, that they'll be included on ownership of our future, the next 500 doors or whatever. So we have a specific contract between them that says that they will be allowed to be part of anything that we close so long as they fulfill their duties. So that's what it looks like for us. Right now, we don't have like employees. We don't have, but we're pretty much just everybody's a partner. But after the contract is over, some of the people might drop off, because they've already gained a lot of credibility by working with us. So they might go their own way. But yeah, it's been good the way we do it. I think we're unique. I haven't heard that same way of doing things before.
Well, I think from they're not employees like you said, but if you're working with somebody and that you have a future incentive that you could be part of the ownership of this deal later on, if you just do what you're supposed to do, that gives you a big incentive to do what you're supposed to do, right?
Yeah.
I have not heard that very often myself either. Actually, never. I've never really heard of that type of a deal, but I'm sure it's very effective, and I'm sure everybody shows up to work every day, does what they're supposed to do, acts with integrity, and continues to move forward. So I appreciate you sharing that.
Yeah.
What markets are you in? I mean, are you all over the place? You're from Salt Lake City. You called me from Colorado. I mean, where are you at?
Okay. Yeah. So live in Colorado. We don't really have much here, a couple houses, but most of our investments are in Missouri, Texas, Ohio. And then we have one property in Connecticut.
Okay. Any rhyme or reason why, other than you're looking for the best deals in operation, or what?
Yeah, no, I got hooked on Ohio a long time ago, so that's just something that I've always been looking at. We're not so much anymore because we don't find the type of properties that we want. Most of them are older, but Texas taxes are phenomenal. Landlord laws are phenomenal. They have a ton of apartments. I mean, I don't have some statistic pulled out in front of me already, but it feels like 80% of the world's of the country's apartment buildings are housed in Texas. So that might not be true, but they just have a lot more multifamily buildings available per capita than I've ever seen. So it's easier to find something happening there. And Missouri is really because of the cost of living currently, the rent to purchase ratios, and because I feel like what we've seen so far is a good indication of the cities that we're in Missouri, that they'll be growing for the next 5, 10, and 20 years. So we're excited about what happens when you purchase it, but also excited about the future potential of the market.
Yeah, and you know what? I'm from Iowa myself, so the Midwest of the U.S. is always somewhere I've wanted to invest, especially in Iowa. I think I'll own some apartments there at some time. I currently own one in Kentucky, and it's the reason I got that one is because of the job or the diversification of industry in those areas. I don't like to go to populations where there's only one industry that runs all the GDP for that area, right? You want to be in an area where there's diversification so that if something happens that would affect one industry, it's not going to crush you, right? So
Yeah.
I'm sure that you're looking at the same type of thing. Cost of living is also a big part of it, and the Midwest seems like it is much slower. You don't have the big huge dips, and you don't have the big huge the peaks and valleys,
Yeah.
so to speak. And so from an investment standpoint on an apartment building, you can hold it for a long period of time. You can get great cash flow, great tax incentives, and over time still increase in value quite a bit. Would you
Hmm.
agree?
Oh, absolutely. You're spot on.
So I guess I won't assume anything. What asset classes are you buying in? I think I know, but
Mostly C.
okay. And why C, not B?
Yeah, good question. The B's are good. A's are fine. I believe from what our market research team and our underwriter have seen is that number one, we can get we can have a better value add if we buy C right now, where there's a lot more that we can do to the property, and there's a lot more that we can use as concessions against the purchase price. So we felt safe there, and the B's and C's are both really good. I mean, if the economy is going up and up and up and up, B's and C's are both going to stay full. If the economy is going down, B's and C's are going to stay pretty full. But the rents in our C's, especially when we try to get larger than average unit sizes for most of our properties. That's one of the things we look at. It makes us feel more confident in ups and downs for continuing to have the cash flow. And then the last thing that was on top of mind when you asked the question is because of cap rates immediately being able to pay a certain amount of cash on cash that we feel is appropriate to give to investors on day one. We find those best in the C class areas. And if we went to B's, it would be much harder to pay the cash flows, the quarterly distributions to the passive investor on the first year. We would have to in many cases, you have to fulfill the business plan. And then when it sells, that's when you can provide the first returns to your investor. So those are the main reasons.
Yeah, those are great reasons. I really appreciate you sharing that. So apartments are, I mean, phenomenal investments, but what do you feel is the impact of the market on your business, and where do you see the next 5 years? Where do you see that things are going? I'm sure it's a common question.
Yeah. Yeah, it is a common question, and it's been answered 1 billion different ways.
Right.
And where do I see? I see the stocks taking a big dip soon. I see most of the areas that we're in withstanding a correction. And I don't see a big real estate crash anytime soon, maybe in a couple of submarkets. But it doesn't feel like it's within this year or next year, to be honest. When we and we can't answer it. Nobody can tell you. And
Right.
when they're always purposefully manipulating currencies. They're always purposefully inflating the stock market. They've been doing that over and over, and then they just cut a bunch of taxes and a bunch of internal purchases of the stocks. So there's so many variables. But what I like is we're looking at the millennials and the baby boomers, which are the two largest population groups for age demographics. And currently, both age demographics are preferring to live in multifamily apartments because they don't have to mow. It's easier to go on vacation, and they're also less likely to. For the millennials, these are facts, not just opinion. I mean, there is data supporting these things that I'm saying. Many of the things I've said today are opinion. But it is hard data to show that a large majority of the millennials are entrepreneurs, that a large majority of the millennials are trying to move around. We see many different companies out there that continue to let you work from home because they are starting to not make you have to travel. For your business for your work, for your job every morning and every night at 8 and 5. But when you look at every single piece of data and carefully, it shows that multifamily is it is the strongest real estate asset out there. Only second one is storage units, which actually perform best in a down market, but multifamily is good in up and down.
Yep. I would totally agree with that. I'm a huge multifamily. I mean, if you can't tell, I'm a huge multifamily fan. I would say that I agree with everything that you said. I read an article this morning about how we're not in a housing boom. If you look at what they're building and the population growth, they're really on track. It doesn't appear that we're, out of sync, so to speak, and that there is not a housing boom. So even though interest rates are going up, there's still demand. There's still people that are moving. There's still people are changing all the time. So, anyways, where do you think you're going to go in the next 5 years from a business standpoint? So let's fast forward 5 years. Where are you at?
Great. By that time, I should be more of just an owner in the company and having a larger team, make sure that we're doing the things that I've been doing and my current team has been doing. We'd very much like to utilize, and I know that it sounds crazy to many people, but the cryptocurrency is getting more and more involved in our day-to-day lives and even real estate. And we'd like to be on the forefront of those things and be able to utilize the way that the technology is allowing us to go to bring us a better result than we are now. So we're always trying to be on the cutting edge, doing things that not everybody else is doing. And I believe in 5 years, we should start to see some of those things that I mentioned really come to fruition.
Yeah, that sounds good. Love to hear that. You sound like you got some exciting things happening. And really, I think this is a good segue into our lightning round. Are you ready for a lightning round?
So ready.
All right. What is your hashtag invest this tip to keep our listeners moving forward? If you could name one thing.
Think big.
Okay. That's a huge thing. Let's talk about that for a brief second, though, because people can think big all you want, but what do you mean by that?
I mean, when I had an opportunity to choose between going to fix and flips, single family fix and flips, or large multifamily acquisitions, I chose, after a couple of flips, I chose to go multi, and it's changed my life. I chose to, instead of become a member of somebody's meetup group to instead start my own meetup group, it changed my business completely. And when I said to myself, I want to teach people how to raise equity, and so I'm going to put on an event to raise equity, I decided to make it a national event and an annual event. And just whenever you think big instead of thinking conservative or small or what your brain wants you to be able to do, whenever you get yourself outside your box, outside your comfort zone, you get a much better result. So just from putting on the Raising Money Summit and bringing in 24 of the top nationwide money raisers, my personal network has changed completely. And the event, as we're recording, doesn't even, it's like next week. So, but I've already gotten the value based on my own personal network.
That's huge, man. I appreciate you elaborating on that a little bit. I think that's the truth. You got to start your own. Or keep out there, get out of your comfort zone. So thanks for that. You have a favorite book that's had a massive impact on your life or business or both?
Yep. Just one currently is Robert Kiyosaki's Rich Dad Poor Dad. I think it will change many people's lives.
Right. That's a good one. We are blessed, very, very blessed. And I'm sure that you've had coaches and mentors, and, you said about your father. Who has given you the best advice, and what has that had impact-wise on your business or life?
Yeah, probably the best advice came from a family member who told me to learn how to say no. And that agitated me quite a bit to hear somebody say that I needed to say no, because we always feel like saying yes to opportunity is the best. But the more every day that rings into my mind, and I learned that by becoming more focused on one thing and not saying yes to everything, I become a more successful person.
That is so big, man. It is unreal. My entire life I've been a yes man. Like, yes, you want to do this? Yes. You want to do, everything is a yes. And recently, really over the last 12 months, I've learned to also say no. I think it's a very important piece of advice. All the listeners out there should listen to that and incorporate it in your life. So thank you for sharing that. I know that you like to give back. What is your number one way to give back?
Well, meetups and events and the podcast. That's how I do it. I give back by educating others, putting on masterminds, and helping people get to where I've been.
Awesome. I do the same thing. I appreciate that. So with that being said, how do we reach you? How do the listeners reach you if they want to learn more about how to go to your next event to learn how to raise some money, or your podcast or anything like that? Where can they find you?
The first and best way to go is BlueSpruce.com. That's REALBLUESPRUCE.com. That you can find our podcast. You can find the companies that we're running, and you can get my email, and you can even see our events.
Awesome. Sounds good. We'll make sure to add that in the show notes. And Adam, I appreciate you being here today, kind of going over your business structure, what you're focused on, how you got to that point, kind of what you're thinking the market's going to do and what your direction is for the company. I really appreciate you sharing all that, and I'm sure the listeners do as well. And so with that being said, thanks again for being here, and I hope to talk to you real soon.
Absolutely. Thank you, Scott.
All right, man. Talk soon. Bye-bye.